Hey guys, how are you? This is Ishai Breslauer, your host of the CRE SharkEye Show, where we discuss commercial real estate, where we discuss prop tech and everything in the world that you guys want to hear. And today we have with us an old friend that we have came across together on deals and on issues that we have been involved with. And he is a master of Connecticut, the master of Connecticut, a super broker, a top broker, deal broker of the Connecticut area. We're talking about commercial real estate deals of caliber, meaning major caliber. And if you want to understand what's going on in Connecticut, that's the guy we have to talk to. And today we're going to explore this market, the Connecticut market. Brad, thank you so much for being with us today. I really appreciate it.
Thank you for having me, Ishay. And that's quite the introduction. You may have oversold me a little bit, but it's okay.
It's a pleasure.
I'll take it.
It's a pleasure. Yeah, it's going to be fun. Before we even start digging into your story, if you could give us like a 2-minute elevator pitch about what your business is about and why you guys do today.
My company is Northeast Private Client Group. We are investment property brokers. We have 2 offices. I sit in Shelton, Connecticut. I have about 10 other agents in my office, a second office just outside of Boston in Newton, Mass. Has another dozen or so agents. So we have about 25, plus support staff in the company. And we sell investment real estate, leased investments primarily. And I would say, historically, our business had been 90% multifamily. That's kind of shifting maybe to 70-60% multifamily. And we do business, again, historically, our business was from the Bronx north and east, all through New England, Connecticut, Rhode Island, Mass. We're pushing into New Hampshire now. And I personally have actually, over the past couple of years, been selling property mostly on the East Coast, but, I've done larger multifamily transactions in North Carolina, Georgia, Tennessee, South Dakota, just kind of following my clients a little bit, where they're buying and where they own. So I hope that answers the question.
That answers the question. That's beautiful. We have a lot to talk about. And what I wanted to ask you is, give us a little bit of the juice and how did you get into this business called real estate? What inspired you to get in? How did you get in? How did you get to the place where you are?
So it was, I don't know, it's kind of by chance. So I was a math major in college, got out of college. My parents are teachers. Everyone in my family, my sister's a teacher, my aunts and uncles everybody in my family is a teacher. I didn't want to be a math teacher, probably just because that's what my parents did and everybody I knew did. I actually got a job as a junior actuary at Swiss Re, a reinsurance company, and the job was in Arma, but I think they're based in Zurich or Munich or something like that. All the reinsurance companies are out of Switzerland. So anyway, it's an interesting job, and actuaries, everything you read is like it's one of the best jobs in the world. It's the highest quality of life. You can kind of name what you pay. You just have to pass math tests, which is what I was really good at.
Got to be a numbers guy.
Yeah, exactly. But I would go to work, and I'm sure this would have changed. And obviously, I was young and stupid, but I would go to work and get to my office and sit down and stare at a spreadsheet all day. And that's what everyone around me was doing with headphones. I mean, there was very little interaction and socializing at all. I mean, people ate lunch alone, it was kind of wild. So,
wow.
After that was like the way that they did it, it was like a junior actuary position. It was like you got like a 6-month or a 1-year contract or something like that. And they offered me, a full-time position after that. And I kind of said, thanks, but no thanks. And knew I didn't want to do that, but I was like, what am I going to do? So I went onto the American Math Association website and for like people who had math degrees, and like, what do people with math degrees do? And one of the things I saw was real estate appraiser. And I was like, oh, that seems interesting. And I always was interested in real estate and architecture and just kind of like driving around looking at big houses and stuff like that. So I was like, all right, I'll give that a shot. And whatever, did that. I don't remember if I had to take a test or what, to be honest with you, a long time ago now, but I started working for a very small company based here in Connecticut out of Wallingford. And really what it was an older couple who was kind of like getting close to retiring, and they had this real estate, this appraisal business. And I don't know if I should say this. I won't say the name of the company, but really, so what you're not supposed to do as an early appraiser is you're supposed to, every appraisal you do is supposed to be done by the senior appraiser, and you are just kind of like shadowing. Right. But within a week, they basically coached me up, and it was just like I was going off doing all the appraisals, and they were just signing for them, which again, I don't think you're supposed to do, but that's neither here nor there. So I did that for 2 years, and that was really primarily residential real estate, homes and small multi, 2 and 3 and 4 family homes. But what it did, and it didn't really, I don't want to say it gave me a lot of preparation for what I do now in the sense of making deals and analyzing deals, et cetera. But what it did do is it gave me a really good foundation for the real basic building blocks of real estate, deeds, how property is transferred, again, it's homes, but how it's financed on a basic level and the process of that. And, so that was
how it's valued.
Really yeah, it was really good. And, that business, again, the residential appraisal business, it's really just you're paid effectively per report, and it's really repetitive. And so, after a few years of doing this, I was like, this is fine, but like, there's a real finite limit to how many appraisals you can do in a day, driving around, taking pictures and whatever. And at this time, this was long enough ago that like, really, I didn't even have Google Maps on my phone. So I'm like using maps and plotting out where to
MapQuest.
Yeah, it was crazy. Crazy. I'd go into the town hall and get a map and circle. It was really wild. So anyway, after 2 years, I wanted to move on, and I started applying for jobs, and I applied for jobs to be a commercial appraiser, and really appraise, that was sort of the next step for me. I felt it was kind of more analytical. And I also applied to be a commercial real estate broker, which I never thought I wanted to be in sales. I never thought I wanted to work on commission, but I said, you know what, let's see what happens. So I applied to actually a big Miller Samuel or Miller something in New York City, one of the top commercial appraisal companies in the city in Manhattan. And I applied to some, large national brokerage firms, commercial brokerage firms in the city. And it just so happened that one of the brokerage firms that I applied to, I went through all the interviews, and the guy said, look, we'd love to have you, but we actually have a position in New Haven, Connecticut. And rather than coming to Manhattan,
why wouldn't you go there?
Would you like to work there? And honestly, I had no money. I was going to be making, even as an appraiser, I was going to be making 40 or 50 a year trying to live in Manhattan. And like, I was going to do it, but I was anxious about it. And this job in New Haven, I could keep living with my parents. And, as a commercial broker, you didn't make any money. There was no salary. It was $0, all commission. And I said, you know what, I'll try that. And so I started working at a big national firm in New Haven for the first 2 years of my career. And that was really cool experience. I happened to work alongside, and when I say alongside, I mean, he was doing his own business, but just being in the office with really one of the top multifamily brokers in the country, and so just to kind of get to see what was possible in this business from him,
You want to share his name, or it's
Vic Noletti. I mean, it was really I got to work in an office with Vic Noletti, who is really, your lead-in, it would probably be more appropriate about Vic Noletti than it would be about me. Let's put it that way. He does a tremendous business, probably over $1 billion a year now in transaction volume. Some of the biggest trades in the Northeast outside of, New York City and Boston proper, Vic does. And, just to get to see that. Now, what I also realized in that office is that, Vic was the man, right? And that's a ceiling. And to be clear, working for Vic wouldn't be so bad, right? But I just kind of, at some point after 2 years, actually, the guy who hired me approached me and, mentioned that he might be starting his own thing. And I told him I wanted to go with him. And so that is when the company that I'm at now, in 2010, we started Northeast Private Client Group, and a little office in Bridgeport, Connecticut. And it was just the two of us kind of sitting in one. It was like a big loft space. We had desks across the room from each other. And it was like, okay, now what? And right. From there, we've grown it to what it is today. And it's been a fun ride. It's been a fun ride.
Tell me something. Since you moved into your own thing, how did you guys start out? Meaning, what was the first deal? Because that's the main struggle of people who are thinking, okay, I want to start my own brokerage. If that's what you're interested in and you see a future in that, and there could be a really bright future in that field, what was the first deal you guys went after? And
good question.
That worked.
Yeah, so the timing, and I think it's important to mention the timing of this. So it's 2010.
Oh, wow.
So I had started in brokerage in February of 2008. And so it was kind of like being the guy who shows up to a party at 2 a.m. and everyone's hammered drunk and just starting to leave. And I'm like, I don't know. I was at my kid's pageant. So I'm sober and all jazzed up and let's do it. And, so July, I got my first listing at my previous firm, July 2008, September 2008, Lehman fails, the market collapses. I actually had just put my first listing under contractor agreement. The buyer just pulled the deal and nothing traded. So for my 2 years of my previous firm, actually, I survived. I mean, I made no money, but I survived selling. I just happened to link up with this guy who actually I interviewed with at Marcus and Millichap, whose father was a real estate owner, and they decided they were going to buy junky 3 families in Waterbury because you could buy these things for 20, 30, 40,000 a house, not a unit. A 3-family for 30. I was selling them $20,000 to $50,000 3 families in Waterbury, and some of the sale prices were so low that the commission at 3% wouldn't even have been. It was the commission was $1,000. They didn't even put a commission on it. Yeah. They didn't even put a percentage on it. It was just that you get $500 if you sell.
Just sell it, get this.
Exactly.
Yeah.
So again, I tell you that. So now it's 2010, and the market is really just starting. Things are just starting to really transact and kind of firm up. It's still not. It's totally. Compared to today, it's night and day, right? I mean, whereas today, and I'm sure we'll get into this. I think it's safe to say it's a seller's market. At that time,
low caps.
At that time, it was is anybody going to want to buy this? Was kind of the the thing. So our first deal was a deal. I think our first deal was a property in Bridgeport. And how did I go after it? I went after it like I went after every deal I've ever gone after, which is pick up the phone and call the guy, see a building that see an apartment building that it looked like I would want to sell, and find out who owned it and call, find out his number and call him up and say, hey, I'm Brad Balletto. And, at that time, I said I sell real estate, or just hey, here's some information, how can I help, kind of a thing. Yeah, so I'm pretty sure our first deal, and it was actually a guy who lived out in Illinois. So it was kind of a unique situation. You don't get a lot of that here in Connecticut. He was a professor. He had bought a few buildings in Bridgeport, Connecticut, and actually, interestingly enough, we sold two of them, and the third one, he mailed the keys back to Chase Bank. So like that just goes to show you the sign of the times.
Right.
He had enough equity in the other two and did okay, and the third one was upside down, and he just let the
Didn't
bank
have
have
interest
it.
to deal with. Just
Just let
take
the
it
bank
away.
have
I
it.
don't care.
Yep. And funnily enough, that building then came back actually to my previous firm. They sold it to a guy from Chase Bank, and then I ended up selling it for that person later on in life. But that
Right.
ends up being how this business goes.
That's crazy. You know something? If you could give us before we get into this whole analysis of the market, then today, etc. If you could give us a short walkthrough for those who are, because we have two types of listeners. One type, the first type are the more professional ones, right? The savvy, the landlords, the brokers, the people who are in the business and want to hear some updates and want to get some good juice out of that. And then some of them are more to the beginner side of things, and they're curious about how it's done. How do you do it? So let's give them just briefly this little walkthrough of, okay, you found a building, and how do you find the owner? Meaning, give us a little bit of a walkthrough from a professional, broker. How do you get to know who the owner is? Why do you, a little bit of that.
Yeah, I mean, so look, everything I learned at my first job in my previous company, and I mean, literally, it was like, here's a desk, there's a phone, there's a computer, like have at it. And now there were people in the office, and you got set up with a mentor who kind of helped you, and they did have some training, but so to answer your question, again, I mean, the way I did it. Was I would actually go to the town halls, and you don't have to do this anymore. It's all online, and maybe it still works, but I would actually buy the grand list from the city, and they would give it to me on a CD, and it would be in Excel. They would either mail it to me, or I'd go down to the town hall, and you'd have to request it or write a letter. And so that grand list is all of the real estate in the whole city or town. And a lot of times it would be, I'd have to tell them what fields I wanted, and they have all this from when they're doing their town appraisals to determine your assessment to figure out your taxes. And so, property type and number of units, size of the building, and most importantly, ownership info, ownership, address, and whatever else they might have. Usually it was just owner and address. And so I would get that. Obviously I would sort it to eliminate all the homes, because that's what I was doing. I personally decided to specialize in apartment buildings, because that's what my company specialized in, and that's what I saw guys being successful specializing in. So that's what I figured I'd do. And so I'd look, I'd sort it by apartment buildings and eliminate all the, commercial properties and houses and land and condos, whatever. And then, a lot of those are owned by LLCs. So you're going to use town, the state Secretary of State will have a site that you can search the LLC to see who the principals are. Get that, and then Google. I mean, I think at the time we were using white pages. I think we maybe paid for some other service. There's a lot of different things you can use to get people's phone numbers and addresses. And then it's just dial in for dollars, man. And that's that. Then it's just you're picking up the phone, and this was something. Again, I never thought I was going to be a sales guy. I was a math major. I happened to be a fairly extroverted person, but I I never saw myself in a sales job. And to be clear, one of the things about my job that's kind of, I don't believe I'm in sales. I will never, I say this all the time, like there is no salesman good enough to sell someone an apartment building, which is an investment, to someone for more than they wanted. It's not like
Right.
maybe you could be a really great salesman. And I hate to say this, but like a car salesman, right? I'm not trying to pigeonhole car salespeople. You might be so slick that like you get them to sign the dotted line before they leave the lot.
Doesn't really work with commercial real estate, right?
It doesn't work like that with real estate. I mean, my job is really to provide information so that, and even more so, organize the market. As a seller rep, I'm organizing the market and just getting buyers in line and maybe creating some competition such that the price is driven up. But it's not,
There's
I'm
so
not
much you can
selling.
control, right?
Yeah, I'm not selling anything, right? I'm just,
Right. Especially, right, you're right, because especially in the field of whether it's multifamily, retail, industrial, doesn't matter what it is, office, people who do that are usually, meaning 99.9%, these are people who know what they're doing. They've already been there. They know what they're doing. They know their numbers.
right.
They're not emotional buyers. This is not a family who buy a house. I love this house. I love the tree. It's not. It's
Right.
numbers. It's
Right.
it's the security of the investment for the investors that they have, for the type of investments that they like to have, whether it's more hands-on, value add or not, or whatever, a core, doesn't matter. It's they know what they're looking for. So I hear what you're saying. You provide them with the best clarity of what the best type of information so they can make a clear decision. You listen to probably what they want, meaning I've been on this side with you, and you
Yeah.
listen to everything and you say, listen, my opinion is that this is the area that you need, and that type of a thing. Let's see. Tell me if you're interested. And that's how the sale process starts. I love what you just said.
Yeah.
You know what? I would like to shift gears a little bit to what's going on today.
Yeah.
And you are in the Connecticut market. Post-COVID, if you could tell us how it went, where is it going?
Yeah.
If you could give us a little bit of an overview of the towns in Connecticut. Obviously, I know you're beyond Connecticut. So whatever you guys are dealing with, if you could make like a little bit of comparisons in terms of valuations to where it's going. We know it's a seller's market all over the place.
Yeah.
Give us a little bit of the juice and the overview.
So I'll try to be quick. So
Don't have to be quick. It's all good.
So January 2020, 2019, best year ever. January 2020, I have 20 deals under contract. Big, massive pipeline. I'm getting ready. Had my best year ever in 2019, and we're getting ready to basically do my best year ever again by June of 2020, right?
Yes.
And I'll never forget it. It's like January, and I had a big list of one of my biggest listings ever put under contract. I'll never forget, they're talking about this coronavirus thing in China, and like, it's not that big of a deal. And I think it was March 12th or March 13th, they canceled basketball. They canceled the NBA. Yeah. That was when it got real, right? And so from that day to, I would say, June, was one of the worst times I've ever had in this business, because there was no winning, first of all, no one knew what was going on. Right. And everyone was panicked. Are people going to be able to pay their rents? Like, they were lockdowns, people can't work. I mean, it was crazy, right? It was just a complete and it's so wild to think about that where we are today. But of those 20 deals, I think 2/3 of them just fell apart. And the third of them, now some of them, I would say about a third of them closed, most with some type of reserve. The big thing at that time was, and of course, banks were also very, lenders were taking big reserves, but even buyers were like, I want to reserve 6 months of rent because I'm afraid people aren't going to be able to pay their rent because no one's going to be working, so there were a lot of concessions that happened. on the deals that I did get done. And what I will say is that ended up being the single best buying opportunity of this site. Those deals were probably the best deals that anyone has gotten
100%.
in a long time, because it was just that. And so anyway, so about a third of those deals closed with concessions or with fights. Two-thirds fell apart. Maybe a third I was able to sell at some point, afterwards. And we can talk about that. Like, I sold deals for more than I ever had them listed for, even pre-COVID, that fell apart during COVID. Right. And a third just kind of went by the wayside. But so anyway, that kind of March to June time period was just, having, because I didn't know it was, calling up people and having, hey, how are you doing? It was just a very strange time. So then by June, it started to become apparent that, like, people, the world hadn't ended. People were, tenants were paying their rent, and, like, life kind of went on. Now that, apart from about,
I just want to make sure that everybody understands, people are listening to the show. We're talking about people are paying their rent. We're talking about multifamily, because multifamily is the most resilient asset class.
Yes.
Obviously.
So I was just about to make that clarification.
Yes.
Again, my business is mostly apartments.
Yes. You said 9% multifamily today, 76%. We're going to get into that, but yes.
But so the commercial was a very different story, right? And so what I have seen is even the recovery that's happened in multifamily, I'm just about to get to, in sales, commercial has recovered, and I think, well, we'll talk about that too, but for sure, commercial tenants, by and large, did not pay. Okay, they just did not. They weren't open. I mean, it's understandable. They weren't open, so they couldn't pay, and many people were put on payment plans, et cetera. But so anyway, specific to the multifamily business, I did my first, and so in July, there started to actually be some, like, transaction activity whatsoever. But even then, sellers were, and I should say this, my business, I exclusively represent sellers. Buyers are, my job is to sell the building, right? Now buyers, many buyers who have bought from me are some of my closest friends and clients, et cetera. And they've made a ton of money, but, like, straight up, people hire me to get them the most they can for their building. That's what I get paid to do. I mean, it's easy to sell a building for cheap if you want to. There's no point paying me to do it. That people pay me to hire. People pay me to get the most that I can for them. So sellers were reluctant to list their buildings publicly because there was still this fear that it was distress, right? Like, I'm selling my building because I'm in distress because of coronavirus, and I'm willing to take a lowball offer, basically. So what we did instead was we were just kind of like doing off-market transactions. Hey, I'm not really willing to list it, but if you brought me an offer at this price, I would take it. And so, probably the third quarter of 2020 was a lot of that. I shouldn't say a lot, but a lot of that. And then by the fourth quarter, we started to, like, list property and sell it, and things were really starting to get kind of back to normal in 2020. Just to give you some metrics, we actually did 120 million in 2019 in sales volume, my team, and then in 2020 we did 150 million in sales volume, but it was bigger deals. So actually our revenue as a broker, our revenue was actually off about 85, it was not 85. We were 85% of the year before our brokerage revenue. And as far as I'm concerned, that was growth anyway, because for a quarter of the year, 25% of the year, no business got done. I mean, you lost a quarter. So being 85% of the year before was actually growth. So anyway, and then this next year, continuing to grow. And so 2021, here's what's happened, and really what's persisted since COVID is in the market from an investment sales perspective, very limited supply of buildings available for sale and a significant amount of capital and buyers chasing them. And then in the apartment buildings themselves, rents have grown effectively indiscriminately across the country, across product types. Some places more than others. Phoenix and Raleigh and Nashville take the Sun Belt markets. Florida, obviously, rents have grown 30, 40, 50%, but they've grown 10 to 20% in Connecticut. And in markets that historically, and by the way, the other thing that's interesting about Connecticut is Connecticut has one of the knocks on Connecticut was always we were losing population, and particularly young people. I mean, everyone that I know, nobody stuck around Connecticut like the dummy. Everyone went to Boston or New York. I mean, everyone who I grew up with, the first thing they did when they got out of college was either go to Boston or New York. They left Connecticut.
Today to Florida, right?
Yeah, or to Florida, right? So, and with COVID affecting Manhattan, everyone wanted to get out of the city. Connecticut, saw particularly Lower Fairfield County. I mean, the amount of people who moved into Lower Fairfield County from the city was insane, and that just kind of pushes everyone up. So, it really, I think, made Connecticut a little more interesting as an investment market, and further, Connecticut has always, Connecticut, we're a market that is adjacent to New York. It's kind of like a weird bedroom community in between New York City and Boston. We have 5 cities over 100,000 people, Hartford, Bridgeport, Stamford, New Haven, and I don't know, one more. Waterbury. Yes. But we don't have any like big cities. So the point is it's kind of like this weird suburb of New York and Boston. And as people left the cities, Connecticut has really benefited. And the buyers, the investors in Connecticut mostly, and I'm mostly in Southern Connecticut, were traditionally from New York. I mean, probably 50-50 local Connecticut or New York based.
Right.
Now, what happened in the city with COVID, first of all, we have to go back. The city peaked in 2015 in investment sales. 2016, there were rumblings of particularly apartment buildings. 2016, there's rumblings of the rent control laws coming. 2018, they're enacted, and that everyone immediately everyone was like, I'm not investing in New York. This is crazy. I'm not investing in New York anymore. Then COVID happens and it rocks New York. I mean, 60% vacancy, everyone leaving, nobody paying rent, which just was like, so that just further pushed people into Connecticut and, to my point earlier about how I was selling all over the country, the Sun Belt and the Southeast. So, I don't know. I'm kind of rambling, but I hope that answers a lot, like what's going on and with the market.
It does.
So really, go ahead.
But you know what? You said in the beginning something really, really interesting. I want to get into that. You said that primarily your business was 90% multifamily, and today it's roughly 76% or 75%. You said something like that.
Yeah.
What is where are the other 25%?
Straight up commercial. So when I say commercial, I mean strip centers, small, mixed use. So office over retail, and then some development sites, which I could never sell in the past.
Right.
And I should say, and I probably should have said this in my elevator pitch, my business we'll do deals from 500,000 up to 50 million and above, right? So which is the mid market, right? It was always like mid market. I'm not dealing with your Aimcos and Gray Stars of the world. I'm dealing with private investors. Hence Northeast Private Client Group. And so we're not the larger office buildings, grocery anchored shopping centers. We're selling mom and pop strip centers, mixed use apartments over retail. Again, mixed use commercial opportunities. And I frankly think that those spaces might be a little bit of an opportunity. It's definitely some risk, but the cap rates in those have not compressed nearly to the extent that cap rates in multifamily have.
Obviously. Tell me something. How do you see the Connecticut office market, meaning everybody's talking office, as the asset class that nobody knows where it's going? Obviously, it's there to stay, but it's going to be different than it used to be because of the working from home and remote and this and that, and still having the value of being in the office by large and medium firms. Everybody knows the value of having people in the office and working with them in the office. But again, it's sort of somewhere unknown. What do you see going on in Connecticut in terms of the office market?
So I guess the answer, honestly, I don't feel totally qualified to answer that. I mean, I can tell you anecdotally, my office is in Connecticut. I'm here in Shelton.
Right.
Our parking lot, and I'm just to make the point, I'm a firm believer in the value of being in the office. I think work from home, and I just don't think people are certain. I'm sure there are some people who are productive from home. In fact, I know some of them that are extremely productive, but you don't have the collaboration, there's so much that is lost not being in the same place as the people you work with, the chemistry, the collaboration, the sort of happy accidents and, just things that happen. So I'm lucky I have my own office and whatever, but I maybe was home for a week or two, and I've been in the office every day since. And the guys in my office came in, not long after me, but whatever. So when obviously coming to the office in April of 2020, there was no one literally there were 5 cars in the parking lot. And I've seen that ramp up to maybe we're close to, half of what it used to be.
Right.
I'm looking out my window because the top deck of the parking garage I can see. But I think our landlord is a major owner and an excellent landlord, our office landlord. And, I think he's done very well. I think people have kept their leases, but they're not using their space as much. I
don't want to lose it.
You don't want to lose it. I think a lot of people, I've heard of a lot of stories of people who took 3-year leases in places like Stamford or Shelton from the city to see what played out with COVID. I don't believe that it's, again, I don't know, but I don't believe that it's the office tenant leasing market is as voracious as it was prior to COVID. But I think we've probably held up okay, I guess is the best answer I can give you in the office here.
That's a good answer. I have a question that I think you are probably one of the most qualified people to answer. Don't get scared. But the perspective is on Connecticut. Connecticut is one word, but so many different cities, meaning New Haven is not Stamford and not Waterbury. And this one is not Hartford, and meaning every town has different meaning. Whoever knows a little bit of that knows that it's different animal. And within the cities, you could have blocks, especially New Haven, that are so valuable and blocks that are not. And
they're right next to each other, by the way.
And right next to each other. And the big question, and obviously we've experienced that, and we've spoken about this many times in the past. But here's the big question. And obviously you have certain type of deals that are, I would say, income producing, core, low caps, to buy, hold, maybe small value add game, like a core plus, whatever. But then you have those very aggressive value add deals or development deals where you have a big problem with the value of the land versus the end product. and this big debate of how am I going to spend on buying the land or the building that is, let's say, is not valuable today. What can I do with it, and where am I going with the market? How do you deal with that? And I'm going to explain for those listeners who don't understand what I'm talking about. I'll explain that in a very extreme way. If you go to New York City in the hottest times, and it's coming back, it will come back eventually. It will take a little time, but it will come back. Let's take New York City in the highest, meaning point, where the cap rates were the lowest of the low and the hottest of the hot, and you take a place that is so hot. When you talk about a place like that, you're talking about the value of the land is so high that the building on it doesn't really make a difference, meaning whatever you're going to build is going to be valued because you're going to be able to rent it, you're going to be able to do whatever you want with it, and it's going to come back to you. It's definitely going to come back to you in a major way because the demand to be there is going to be there. When the value of the land, and I'm going to take the most extreme example before you start your explanation. Let's say I buy in the middle of the Sahara Desert a piece of land and I build the most luxurious multifamily building ever. It's going to stay empty. It's going to stay vacant. Okay. And that's the example. So meaning that's my question. So when it comes to New Haven or other places in Connecticut, doesn't matter where, how do I play with it right? And I don't lose in that game of value add and development.
Yeah. So I just want to start out by saying, and this is not a pitch for Connecticut, it's just my observation having transacted in Connecticut and also places like the Southeast that are incredibly popular. I actually think Connecticut is a real opportunity in general for investors because I think that, you know, when you look at what's happening in places like Florida, North Carolina, Atlanta, you know, et cetera, on at Nashville, on and on and on, even the Midwest, you know, value add multifamily, which is the majority of my business. Value add being you take a building that, you know, is a B or C class building, you know, 60s, 70s, 80s vintage. And, you know, the apartments are a little done, you know, a little tired, and you know, renovate them and increase the rents. Value add apartments in the, you know, nutshell. That's kind of what I sell. A lot of, you know, 60s brick buildings. When you compare the cap rates, what that stuff is selling for in the Southeast versus what it's selling for in Connecticut, it's, you know, the Southeast, these deals are selling for 3%, you know, 3 about cap rates. Connecticut's, you know, in the 5s, and it all depends on your underwriting, but in the 5s, maybe a little below, but still Connecticut has tremendous demographics. It's, you know, I just looked this up. It's one of the wealthiest states in the country. Now, you know, we don't have 10, you know, 2 to 3% year over year population growth like places in, you know, Florida, et cetera, have, but it's not so bad. So, you know, so I think the point is like, I think there's a lot of opportunities to find yield and do well in a great market here in Connecticut that's maybe being a little overlooked by investors who are so focused on the Southeast. Now, the one challenge with Connecticut is it doesn't have the amount of product that other places do. It's an older market. It's a much more mature market. You know, you go to places like North Carolina, and they're in a town of 50,000 people. There's 150 unit apartment complexes. In Connecticut, you know, there might be 150 plus unit apartment complexes in the whole county, and there's only 8 counties, you know. Most of Connecticut is going to be smaller buildings, you know, 10, 20, 30, 40 unit buildings. Most of them were either built, you know, pre-war in the 1910, 20, 30, or in the 60s. You have some 90s product, and then you kind of have a building boom happening now. As far as the cities, look, my opinion is you can make money anywhere. You just have to have a strategy that matches the city, and you have to have a strategy that matches the location. So, for example, Stamford is a wonderful city. It's, you know, top 1 or 2 cities in the state, depending on who you talk to. Arguably, you know, top city in the Northeast. You know, tremendous amount, diverse employment base, very affluent. You know, again, a lot of people commute into the city. A lot of people commute out of the city into Stamford, adjacent to Greenwich, one of the most affluent towns in the entire universe.
Right.
A bunch of hedge funds, et cetera. You know, really cool neighborhoods. You got a great downtown, you know, somewhat walkable. You've got this new Harbor Point neighborhood on the water that's being built that's kind of young and trendy. And then you've got kind of more suburban areas up in the north. I mean, it's really, and Stamford benefited tremendously from COVID because it's a place where you can have like a suburban home but still experience a lot of the benefits of like urban lifestyle. And so
right. It's pretty close to the cities, right?
Exactly. So a place like Stamford, you know, you're not going to buy anything cheap. Cap rates are going to be very low. It's very desirable, great demographics, tight market, not a ton of product. But you might be able to find yourself a 60s brick building that's been owned by the same family for, you know,
right.
30 years.
These are right. You're right. The normal opportunities you have in hot places.
Yes.
Right.
So that's a place like Stamford. Now, New Haven, you're going to have a mix. New Haven's a very interesting market with Yale and you know, you've got some of the nicest neighborhoods in the town and the state, and some of the toughest neighborhoods in the state, all kind of very close to each other. New Haven's interesting. I mean, there's a lot of different things you can do in New Haven. I happen to think New Haven's got one of the coolest downtowns in the state. It's probably one of the coolest cities in the state. Tons of restaurants. You know, the challenge with New Haven is it has cap rates have compressed tremendously in sort of across the board, even in the more workforce locations. So, you know, there's definitely opportunities in New Haven to invest in. I think one of the things that New Haven has is tremendous demand just in general from renters. New Haven is also in the process of being totally transformed. There's a ton of new supply coming on the market.
You got to be on the right block, though, unless you have patient money. Patient capital, you can buy something and wait a few years until the market will come to you. But I don't know what of an investment strategy that would be. That's a good question.
Right. But again, you know, and this was seen in Stamford for a while. I mean, Stamford built, I think, 1,500 or, you know, 2,000 apartments. One of the, as a percentage of the existing apartment stock, one of the highest percentages of supply increases in the country was Stamford, Connecticut. What happened in Stamford pre-COVID was, as all this happened, you know, 2012 to 2020, really, as all this supply was being put into the market, the rents for Class A properties really didn't grow. They kind of were just totally stagnant for 8 years. And in fact, you even have a couple examples of buildings in Stamford that were built in 2012 to 2015 that sold, you know, right at completion, that are selling again now for less than what they sold for 5 years ago. And that doesn't happen very often, right? Certainly not in this market. New Haven, I think, is going to be okay, but I think I would be very concerned if I were buying or owning Class A buildings in New Haven, because they're in the middle of that kind of cycle right now. You've got Spinnaker building the Autobahn. You've got my good friend Darren, who just built a wonderful project on Worcester Street. You've got 2 other projects right next to it on Worcester Street. I mean, CoStar, College and Credit. Tons of supply coming into New Haven. So I think the opportunity in New Haven is really more, again, a lot like Stamford. I would be kind of looking at value add over Class A, right? Or development for that matter. Now you've got your cities, not cities. I mean, they're all cities, but Waterbury, your Waterbury Hartfords of the world, right? These have traditionally been cash flow markets. And what I mean by that is they're, you know, the demographics are different. Hartford's the capital city, actually has one of the prettiest skylines I've seen in all my life. I mean, it's really cool skyline city, but when you're actually down,
a lot of insurance.
Okay. It's a lot of insurance, and that's kind of leaving. So the point is, both of these towns, the demographics aren't great. Waterbury's more of a kind of a washed up mill town. It's where I'm from, but, you know, so I say this lovingly, but, you know, kind of a town that, was a industrial powerhouse, and the industry has left and nothing's really filled it back in. So these towns, there's Hartford is starting to experience some development. That started first with some conversions, and now Randy Salvatore has done a ton of development in New Haven and Stamford and elsewhere, is sort of redeveloping the North End, which is which is adjacent to a very challenging neighborhood. And Randy's been very successful kind of going block by block. But these markets, those markets, maybe it would be interesting to own Class A because there is so little supply. And as now, I don't know that there's any Class A apartments in Waterbury, but maybe in New Haven, you could
maybe in Hartford.
Right. Excuse me. In Hartford. In Hartford, I would definitely buy. I think it would be very interesting because there's very limited supply, and apartment rents are going up everywhere. And that might be an interesting choice. Or in Hartford and Waterbury, I always say, I would just want to buy them where they're going to cash flow from day one, because I think that's kind of the opportunity in a place like those type of markets. I don't know. I feel like I'm missing something. Oh, Bridgeport. Bridgeport's one of my favorites, actually, and I've got a ton of business in Bridgeport. Bridgeport is just starting to see. Bridgeport's a wonderful market, one of my favorite markets in the state. Kind of a blue collarish market, unique neighborhoods. Interesting downtown that's got some juice, starting to see some cool stuff happen. Comedy club, brewery, some new apartments. For the first time, they're building a Class A deal in, Spinnaker's building a Class A deal in Black Rock, which is a really nice, kind of like seaside community of homes and really cool little town. Some other new developments are happening downtown. So, also some conversions. I happen to be selling a pre-war brick building in downtown Bridgeport that was fully renovated and getting great rents and good tenants. Walk to the train station. Bridgeport is a great town that I would invest in anything in Bridgeport, because I have invested with my clients in Bridgeport because I believe in the market. I think it's just it's benefited from Norwalk and Stamford and all of lower Fairfield County being so expensive, and the people who can't afford to live in those places, who don't work at the hedge funds, that do normal jobs, need to have some place to live, and they live in Bridgeport.
For sure.
And so that demand has just been great. Rents have grown. I think I would build in Bridgeport. I would value add in Bridgeport. I love Bridgeport. Love Bridgeport.
So you guys are listening. You probably heard so much about Connecticut that you've never heard before. And we're talking to the man, Brad Balletto, and he's giving us so much great information and insight. I really appreciate that. Brad, if you could, before we said our goodbyes to everybody, if you could tell everybody where they could find you, how they could find you, if there's a website, LinkedIn. You guys see the links below above. Go ahead.
Yeah. You can find Northeast PCG Private Client Group, northeastpcg.com. That's the company. You can go to team and find me, Brad Balletto. I'm on LinkedIn. Perfect. And all my contact info is on the website. That's how I would find. LinkedIn or the website is how I would find me.
Perfect. And you guys can see the links and contact Brad if you're interested in Connecticut. Definitely should look into it. Brad, thank you so much for your time. Really appreciate it. It's great to see you also and talk to you again.
Likewise, man. This was fun. Thanks for having me.
No problem. You guys take care.